First of all, Jerome Powell was definitely setting us up for a rate cut in September. I think he was trying as much as he possibly could to let us know that a rate cut was coming without acting like it's guaranteed. And I think that's responsible. And I think yesterday's move was correct. The market now believes there's more weakness than is priced in terms of the economy. So, and we're seeing a little bit of a sell-off today as we're speaking right now. I'm looking at the NASDAQ down almost 1% after starting the day up. And I think that's part of it. Okay, you didn't get enough of a move. And I'll be able to talk about this more later because the QQQ is something else that I want to look at. So we'll talk about this more.
Cool. What do you think about the current tech earnings? Some of them beat the expectation, and that's reflected as a positive.
I think they're mixed, to be honest. I mean, NVIDIA did obviously really well. AMD didn't do so great, but the stock did okay. We've got, I think, some of the more important earnings today because they're more broader market tech, like Apple and Amazon. Amazon counts as a consumer cyclical now. They don't look at it as tech, but it's tech. I mean, a majority of their earnings comes from the Amazon cloud, which is not, consumer discretionary or a consumer cyclical. So, it's not. I think Apple and Amazon have a chance to save the NASDAQ. I've been saying that the NASDAQ has kind of moved into a neutral spot on my charts. And that neutrality can be broken through earnings. So the fact that it's happening during earnings means that I'm not telling people that it's neutral yet. I'm saying that's where NASDAQ and tech specifically is in my charts, but I'm not calling a flattening of the bull market yet because we're in earnings right now, and earnings can change it.
Thanks for that. I also remember from the last week that you were saying this pullbacks is that doesn't look like staying long here, and you mentioned that that's your idea, and is that exactly what we are seeing right now?
Yeah. It's basically it's a stay long but don't get longer pullback. The way that I see it. I don't think you add to positions in this particular pullback. I think we will be buying this pullback, but we'll be buying a little bit higher from here. That's sort of my overall view.
Okay, thanks for that, Bob.
All right, so you guys can see this trend line or this channel now, right?
Yes, it's more clear now. Yeah.
All right, so this is the downward sloping channel that Chipotle had been running in. Okay, now we ended up with another trend line down like this. Okay, and I'm going to make this one bigger. Or I'm going to make this one thicker so you guys can see it. Really, I don't need to change the color. I just need to make it thicker. All right. If you could see this second trend line, okay, let me zoom in for you. This bottom trend line of the trend channel and this trend line form a falling wedge. Okay, so what does the falling wedge do? Well, the falling wedge gives you, put that there, it gives you a break and an upside target. The break to the upside is the upper trend channel line. So when this broke, you could have bought Chipotle looking for it here. And then today it opened up higher, it opened up through your target. So you would have had a nice little long trade on Chipotle trading this wedge. The wedge will become more clear as I zoom it out like that. You see the trend channel, and then these other two white lines here are a falling wedge. A falling wedge is a bullish signal in a bearish longer trend. That's what it is. Okay, so that's the recap from it. We have the opposite in the opposite direction. If we have a rising channel and we end up with a rising wedge, it's a bearish pattern within a bullish trend.
Yes.
So that's the quick recap. It just so happened to have this.
How do you identify that reversal?
Well, when you see a wedge developing inside of a perfect channel, that's when you say, okay, this might be happening. Now, all you're looking for is a move to the upper channel line here, right? That's all you're looking for with the wedge. So it's more of you want to trade a stock with more movement than Chipotle has, because you want wider short-term ranges to be able to trade those, because you want a target that makes sense. So like if this wedge came in right around 61.49 and the target ended up being about 63.49, it's $2, right? You would have had a $2 target in this trade. But when you waited, if you waited for it to close, you could see that the close on the day was 62.67. So to go to 62.67 to 63.43, you're only talking about, less than $1 basically. So you probably wouldn't have taken this trade. But I just so happened to have an example of a falling wedge. Now, if we would have waited till somewhere down here as the wedge got tighter, and the space between the wedge line and the upper trend or the upper channel trend line got wider, you have a much better trade developing. And that's really what you hope. This one, because of markets, broke too soon, and you probably wouldn't take that trade once you did risk reward. But that's kind of what they look like. So that's kind of the review.
I was going to ask, actually, do you wait for any confirmation? But I think you kind of touched that.
Yeah, for me, it's always the close. But as you get shorter and shorter in your time frames, I know a lot of people trade 15-minute charts, 5-minute charts. You don't want to wait for a close. You just want to trade a break.
Okay.
All right. So a break and a close are two different things.
Well, at that point, I think setting a stop loss is kind of important. So you remember you're setting your stop loss for ATR, right?
Yeah, on that particular one, I am. Yes.
All right. Thanks for that. Well, Ben says restaurant stocks might be hot for the next little while now that survivors of the COVID are recovering. Good news from Shaq today as well.
It's interesting that Ben says that, because that's part of what we were going to talk about today, right? Blending the fundamental and the technical.
Yeah.
So what Ben is showing you there is the same process that I have for the most part. Now, we did do a course where I went back and showed how to develop a watch list, or how I developed a watch list. That was a while back. Potentially we can do that again. I wouldn't do that next week, but we can do that in a couple of weeks, Badish, if you want. Let some time go by. But Ben just basically has a theory, right? Restaurant stocks may be hot due to COVID, due to us recovering from COVID. And I think he's probably right about that. Well, then what do you do? What restaurant stocks do you look at? Is it a Chipotle? Well, I just had that Chipotle chart up. Overall, the chart didn't look good at all. Right? It was a pretty bearish trend, and all this breakout through the wedge did was put us in a wider range bearish trend, right? So not really a bullish chart. Could be turning bullish, but I don't have a signal for that yet. So Ben says, restaurants could be a good thing. Well, what are we looking at? Are we looking at somebody like, Cisco Foods or Mondelez, who are restaurant suppliers? Are we looking more at stocks like, well, let's just go, for example, Chipotle, Wendy's delivered earnings today. Is that the kind of thing you're looking at? Or are you looking more at a Darden Restaurant Group, which has sort of middle to higher end? Certainly not high end, but middle, right? And by the way, quick note on that. Wendy's, their CEO said that wealthier clients are starting to visit Wendy's. So in contrast to Ben's theory, well, it's really a complement/contrast. If wealthier people are visiting Wendy's more often, that means they're visiting other restaurants less often, right? That means they're starting to feel pinches of higher prices. Now, we've never talked about this, but I am a 100% meat eater. I don't eat vegetables. I eat a tiny, tiny bit of fruit. I've actually got a little cup of cherries here because it's one of my favorite fruits. But I eat mostly beef, some fish. I eat butter, salt. I'm getting off the subject, but it's
no, that's great. No,
it's helped with joint pain in my older years, right? My joint pain has completely gone away eating this way. All right. So when we go to restaurants, I either go to a steakhouse, which is wildly expensive right now. Or I go to a place like Five Guys or Wendy's or Culver's, which is a burger chain in the US, and I get burgers without buns. So I'm one of those people, right? I'll go to Wendy's and I'll say, give me a triple bacon cheeseburger, no bun, no vegetables, no mayonnaise, just the meat, the cheese, and the bacon. You know?
Ben, I agree with you.
Yeah. So I'm one of those wealthier people who's now going more to fast food. That's because the steakhouses have gotten so damn expensive. So it's a shift. So you want to add that to your thesis. That's part 2 of the fundamentals. Actually, I'm going to change completely what I was going to talk about. How about this? Okay.
Yeah, sure.
Because now we go to Ben's theory and we go, okay, he has a fundamental theory. And Ben got that theory from his life experience and what's happening around him anecdotally. Now, some of these things can be regional, but some of them can be national. And the way that you find out if they're national is by going technical, right? So I just showed you guys Chipotle. Doesn't look very good, right? Let's, what is Wendy's symbol? Can somebody look that up for me really quick? I think it's WEN.
Yeah, we have a look.
Yes, if somebody could tell me Wendy's signal or symbol rather, because I don't have it handy right now. I can look it up here.
It's WEN.
All right, so let's pull up a WEN chart and I'll share my screen. Again, this isn't what I was planning on doing, but because I got feedback from you guys, it becomes a very good thing. And I hope you guys learn that you shouldn't be shy in this particular session.
Definitely.
If you're shy in this session, you're not going to get your specific questions answered. So let's talk about Ben's thesis. Here's Wendy's, okay? We had a big sell-off in Wendy's yesterday with high volume, very high volume. You're seeing my cursor too, right, buddy?
Yes, yes.
Okay. Today we have a sell-off, continuation of a sell-off with low volume. Now, Wendy's came out and fell after their earnings. Why? Well, the CEO said they're losing the low end, but they're getting the high end in terms of income. Okay, what does that mean? Who would be the regulars at Wendy's? Would it be the low end or the high end in normal economic times? It would be the low end, right? And by that, I mean socioeconomic low end, right? If you're somebody who can't afford to eat at a steakhouse every week, you might eat at Wendy's once a week. If you're somebody who never eats out except going to fast food, you might be once, twice, 3 times a week. That consumer shifts to home eating first before the wealthier consumer does. The wealthier consumer shifts from steakhouses down to Wendy's and then down to home eating. What is the larger population of Wendy's business? It's more likely the lower end socioeconomic consumer. So while they're getting a larger bunch of higher end in terms of, again, socioeconomics consumers, they are not going to make up the foot traffic for losing the lower end consumer. They're just not, right? So when I look at this Wendy's chart, we talked a couple of weeks ago about the rotation zone, right? We did 4 or 5 sessions on trend lines, and we did 4 or 5 sessions on the rotation zone. So first, I'm going to draw a trend line here, okay? This is my initiating point for those of you that were in those sessions, and here's my defining point. What's happening right now? A potential break of this short-term uptrend here that started here, right, and then flattened out with this rotation back up. I might be getting a break of that. Medium term, what do I have? Well, medium term, I have a downtrend. There's my initiating point. There's my defining point. Longer term, I don't have to draw a trend line for you guys to see what's happening longer term. Okay. I can just do this.
Yeah, it's kind of bearish.
Basically, longer term, you guys can see these lines, right?
Yes, we can see well.
Okay. So longer term, you're in a bearish trend for Wendy's. So if I get a breakout of this short-term uptrend, it is possible for this short-term uptrend, this shorter-term trend can turn into a medium-term trend if the trend line holds and we break the medium-term trend line. Now I can say, okay, I'm in a longer-term downtrend, but I'm in a medium-term uptrend. that's when I would start looking for Wendy's longs, right? Currently, I wouldn't be looking for anything. Now, we talked about the rotation zone, right? Here was a first cross down on the rotation zone, the blue and the green, okay? The blue is the red and the blue, my bad. The green is the 50. Here's where I had that cross lower. Now, the 8 exponential moved below the 21, right? And all down here, the 8 exponential is pushing the price lower. Here, I get a move up and a test, right? I draw a little best fit trend line here. We're doing a big review. Then I get a close below it here, which is a short signal. And then I get to move all the way down to here. Somewhere in this area I will cover. I haven't been able to show you guys how I measure those targets out, but I can tell visually that this would have been a cover. Now, the rotation zone has not been broken yet, okay? So I get another move up in here, all right? So I draw another trend line there, best fit trend line, okay? Right in this area here. Whoop, screwed that up. Hold on. It would be right in this area here. Okay, now I get a close below here, right? That could potentially give me a short. I immediately get stopped out as we move up through the upper side of the rotation zone. So far with this downward rotation zone, I got one profitable trade and one loser, right? Just being honest. Now, this close below would have been a short signal for me, for sure. But it got stopped out to the upside. That's fine. You can't win on every single trade. Now, it breaks the rotation zone, and you see here the rotation zone starts to flatten out. I no longer have a rotation zone I can act on. It goes down here, but then it violently breaks up here, crosses up, and now it's doing nothing. Okay, it's doing absolutely nothing. I would not have traded this one because even if I drew this downward sloping trend line, I never got to close through it until the rotation zone actually tightened up and flattened out. So there's no trade for me there. Okay, so I'm melding my technicals with my fundamental theory on Wendy's. Okay, that's what I'm showing you here. I'm showing you a whole process. So I've got a technical thesis that I agree with Ben, that restaurants will probably stay busy. So now it's a matter of finding the sweet spot, right? Which restaurant stock is the one that I want? So let's take a look at Darden. All right, Darden's symbol is DRI. Darden is a little bit higher end, okay, slightly, not greatly. All right, and we see a similar pattern to the Wendy's, except one thing, one very key thing. I have a potential double bottom here. Now, I need to measure these two out, and I'm going to do it on my other chart here that you guys aren't seeing because I've got my settings preset to measure that. But what I'm showing you on this double is the right-hand side low has to be within 25% plus or minus of the left-hand side low. Okay, and if it's not, it is a lower probability double. Okay, and I have a way that I do that, that I measure it, that I'm not able to show you there. And it is. Okay, it is within 75 basis points or 25% rather. This low is within 25% of this low. So that means it's a higher probability double. Okay. Now, my signal is a close above this top right here. Haven't gotten it yet. This did not close above this top. Darden Restaurant looks a lot better to me than Wendy's does. All right. So now let's do the same thing we did with Wendy's with trend lines. All right, I've got a short-term trend there. I've got what I would call an ultra short-term uptrend here. Okay, and neither one of those has been broken. All right, so I've got two short-term upward sloping trends. I have a medium-term downward sloping trend. Got one here, got a couple of them actually. And then I've got that's initiating point and defining point. For those of you that watch the trend line series, this is why you guys need to show up to as many of these as you can. because I'm going through 3 or 4 things that we already talked about. Okay. Now, I can't pull this chart more forward. Okay. But if I could, you would see these 2 lines converging into a triangle, right? We all know what triangles are. And this upper trend line is very close already to the breakout long for this double bottom, right? So if I get a close above this trend line in the next couple of days and I get a breakout above this double bottom, what's my target for the double bottom going to be? Well, I'm going to do this really quick manually. I'm going to subtract this high, okay, which is 148. I think it's 148.86, but you can just, you could understand the math either way, right? So 148.86 minus the low, which is 138.21. And that equals $10.65 added to 148.86, which is this high again. Okay. And that's 159.51. So right around 159.51, I'm going to go ahead and put a line. That's about right. It's a little high. Actually, I can adjust this, can't I? Where do I put the price in? Well, I'll figure that out for the next one. But we're pretty close here. We're at 87, okay? But the target for this one is 159.51 or 158.51. Let's call it 158 because it's a round number. What's the high here? The high here is 158 even. That's your target. So if I get a close above this high, which is July, again, I'm doing this on the fly, guys, so bear with me here. I haven't looked at these charts before. July 16th, okay, if I got to close above July 16th's high, I've got a long with a target of 158.50. Simple. That also is probably going to be a close above this trend line. Now, do you guys remember what I told you the targets were? Any of you who were in the trend line sessions? What's the target for a broken trend line? I've got an initiating point here, and I've got a defining point here. The first target for a broken trend line is a defining point. And what does it match up with? The target for this double bottom. So when you have convergences like that, you have a very powerful pattern. Now, this is a risk show. So I'm going to stop sharing for a second. Okay. Do not put on bigger trades because you have a high probability pattern and you have multiple things pointing in the same way. Those people that tell you you have a high conviction pattern because you have a confluence of signals, so you should put on a bigger trade, are out of their minds. And you know why they are? I guarantee you've heard this before. They tell you that because in their minds, they get to prove to you that their trade was a winner, and they'll have you subscribe to whatever you're subscribing to and pay them more. Here's why you shouldn't do it. Our double bottom patterns, with all the rules that we have built into it, are in the low 60 to mid 60% probable in terms of it being a gain, in terms of it being a winner. That's a good percentage for a lot of patterns. But that still leaves 40% of the time that it's wrong. 40% of the time you're going to be stopped out. It's actually less than that, but let's just go with 60-40. That means if you put on a larger winner every single time you see a double bottom combined with a trend line, if you lose 3 or 4 of those in a row, you have now destroyed the one thing I've been trying to teach you guys, that the protection of your capital is more important than anything. Because if you don't have money, your trading career's done. It's over. The only way you should put on a bigger trade is when your account grows. Then you put on a smaller trade when your account shrinks. And you do that by thinking in percentages, which is something else I've been trying to teach you guys over several sessions.
2%, isn't it?
Yeah, well, whatever. To be honest, I don't care what percentage you pick. as long as you stick with the percentage.
It's
Because
just the mindset. Yeah.
yeah, the mindset, a lot of people are out there saying 2%. I've got no problem with 2%. I think it's a very responsible percent, but you could also trade with less capital and have a bigger percentage of risk. So let's say my net worth is 10, 20 million. Well, let's do somebody else's. Let's say your net worth is $150,000 and you say, okay, I can lose $5,000 without changing my lifestyle. Okay. I can lose $5,000. No problem. What percentage of that $5,000 do you want to allocate to a trade? All right. Well, I only want to lose no more than 500 per trade. If I lose 500 per trade, $501 is going to make me throw up. Okay, you're a 10% per trade trader then. That's it. If it's $50 and you're a 1%, that's how you do it. Maybe that's what we should do next week, because I think I'm going to have a lot of the same people after I told you, show up every week. Because if you don't, you can't put together everything I just showed you.
So if there is no more question, I want to ask you and the people in the room what topic they would like to see next week. I was thinking entry and exit points, but after today's session, we can adjust it.
Yeah, I think we should probably adjust it, going back to just kind of do an entire session review of percentages and risk per trade and all that, so that anybody that just joined recently can see it. And then once the compliance has all the recordings going, we can just reference them to the recordings. I do want to say one thing. Somebody raised their hand named Balbir, Jane Balbir. You don't have to raise your hand. You can just throw your question in. I don't think we respond to that question raising.
Unfortunately, not.
Yeah.
All right. So we are agreed on the next week's session as well.
Yeah.
We are coming end of our time for today. I would like to thank you, everyone, for joining us today. I hope you gained a different perspective of how to combine technical and fundamentals. A special thanks to Bob Iaccino and his puts for today. Stay tuned for more TradeZero Live sessions, and happy trading. Thank you.
Cheers, guys.